monetary system, which is what Bitcoin is, right? It's programmable value. And it has the potential to displace the entire financial system, the rails, the savings mechanisms, the spending mechanisms, all of it. But that don't happen if we don't build robust institutions and stop with the tribalism and the FUD and the, oh my God, we. From 20 all the way down to 8, then we bounced to 14, then we went down, so it was basically 14 to 6, kind of all during spring and summer, physical spring and summer of 2018. And into the fall, we just hung out at 6. And we made that descending wedge pattern, and you just bouncing off the 6. And then, bang, November 14th, we were down the 50% down to 3,200. And we hung out at 3,200 until December 18th. So about a month. And then we started up. And again, it wasn't straight up. It was up and then down. But it was these ascending patterns. It was higher lows, higher highs. And it doesn't mean we don't have roller coaster, but instead of the roller coaster being that flat or worse down, it's these, you're basically like locked in the track that's heading higher. And the real reason I believe that spring is here is we had the cathartic puke, right? We talked about this, 6-7 weeks ago, whatever it was, whenever consensus was. And, I kept saying, look, the longer we're at this 30,000 level, the more likely we are to have that final puke to 15. And we didn't hit 15, we hit 17.5 or 17.6, whatever it was. That's good enough for me. So I really do think the leverage is gone, right? I'd like to see really people saying it's going to zero, going to zero, going to zero. And I haven't heard from Peter Schiff in a long time. But on the macro thing, look, you are focused, as always, on the question. And the question is, can Bitcoin do well? Can digital assets do well in a nasty economic environment? And let's remember that back in 2018 into 19, there was the threat of rising rates, and we weren't sure that the economy was going to rebound. It did a little bit once they stopped the threat of raising rates, but we weren't like really robust. But the environment that's great for wearing the orange shirt is when there's easing and devaluation of currency, which is the exact opposite of what we have now. And I think that's going to end as people realize just how bad the economy is. And the central banks around the world realize, geez, we really are in a global recession. And then, once you start easing and creating more money, then remember, one Bitcoin's one Bitcoin, but we don't price in Bitcoin. We price in currencies, dollars, yen, euros. Yen continues to decline. Bitcoin and yen making all-time highs. Bitcoin and euros making all-time highs. Dollar, we've been hovering, but I think we're headed. I think there's gonna be a lot of liquidity created in the next 18 months. I think part of it is, and I'm not sure why people are so willing to switch narratives. So on this thing about worrying about the macro environment means people have started to believe this narrative that Bitcoin's a risk asset and that it's correlated to stocks and it's just another speculative asset. It's not what it is at all. Now, we talked about this last week that, look, my personal pet peeve, and I've taken a lot of crap, okay, technical term, in the past few weeks. It's like, oh, you suck, and BlockFi, and you lost all this money. I'm like, guys, I have had tons of losing investments in my career. I mean, tons. And I'm not proud of that. I mean, I'd like to win. make money when I invest, but that's the nature of the beast. If you get upset about losing money, you're not going to make any money ever. And I've talked about this over. Winners in this business lose way more than losers, because losers are so paralyzed with losing that they don't ever take any risk. Well, the winners just keep putting stuff on and have lots of wins. So I've had way more winners, thankfully. I hope to have more than losers. But I've taken all this crap about people saying, it's this speculative asset, and you need to take all your Bitcoin and take it off chain and take it out of the lenders. What are you talking about? Putting Bitcoin on a hard drive and bury it in your backyard is gold. We have gold. We don't need that. Okay? What we need is a new monetary system, right? A better, more fair, more robust, deflationary instead of inflationary monetary system, which is what Bitcoin is, right? It's programmable value. And it has the potential to displace the entire financial system. The rails, the savings mechanisms, the spending mechanisms, all of it. But that don't happen if we don't build robust institutions and stop with the tribalism and the FUD and the, oh my God, you just got to clutch it and never use it and never spend it. Now, that's stupid. And so that's a long-winded way of saying that I didn't answer your question.
Yeah.
Which is, look, I don't believe that Bitcoin's a risk asset. I just don't. I believe that it is a fundamentally different asset. It is 0.0 correlated to bonds over the life of the asset. It is 0.15 correlated to stocks over the life of the asset. And it's because its return is derived not from the things that stocks and bonds are derived from, which is GDP growth, interest rates, productivity, Fed policy. It's derived from millennial adoption, right? Young people saying, I want digital value, by the technology itself, by regulation, and by, usage and adoption. And so those things aren't impacted by macro, but in the short-term period, when you have liquidation cycles, which we just had, and you had excessive leverage, and you did have speculators punting in digital assets. We did. And to those people, it is a risk asset. So that's the difference. The core community that supports it and drives the development are not punters, speculators, and degenerate gamblers. And that's the difference. So I think a bad macroeconomic environment is actually needed. We've talked about this. No one likes winter. No one wants to talk about winter. Well, you and I that like to go to Colorado to ski like winter, but no one likes winter, like where companies go down and you have to lay people off, and the weak ones they actually die, and that's no one likes that, but it's necessary. And we're finally at a point where the central banks are saying, we propped up the environment for 14 years. We went 14 years without a recession. That is not normal. Not normal.
No.
Has two uses. It's got its commodity use and its monetary use. So you can use gold and fill your teeth with it. You can put it in electronic circuits. You can stack it up and use it in other industrial ways. But it also has this monetary value. Jewelry and stuff. You can mold it into other stuff. But it also has this monetary use. And better is you can take that monetary value and you can use it as collateral for other things. Right? What do central banks do with gold? Okay, let's think about this. What do? They put it in vaults and then they create money against it through debt. That creates economies. Right? They don't have no assets. Central banks have assets. Right? And historically they had all gold. Then they had gold and other currencies, and now they have this basket of assets. But they have assets. Now, I would argue that their balance sheets look horrible at this point because they created too many liabilities. But Bitcoin has this ability to be embraced and adopted by the people that make the economy, as opposed to just the speculative investors. And that's, to me, what makes the Metcalfe's Law chart work. Right? When we had Tim on, the reason that chart works is it really graphs the embrace of users, like real people that put it in their wallet and hold it and use it and transfer it, and not in the Bitcoin pizza way, but in the, hey, I have value